All right, now for the future of GameStop and the shift away from the console to PC and towards mobile and social gaming, we're joined by Chang, a partner at Norwest Venture Partners. He struck gold in the social gaming field twice, leading the firm's investments in NG Moco and Playdom, also on GameStop's advisory board. Tim, glad to have you here to talk about gaming. One of the reasons we do this show is because the technology world has changed so much in the last 10 years, and maybe nothing more than gaming. How do you invest in that?
So gaming has always been viewed as sort of this hit content business, and content is not something venture capitalists like because there's all content risk. You have no idea if you can scale a business or not. But what made it change is lower cost distribution platforms like Facebook and iPhone. So what we're talking about here is instead of $50 million to build a AAA game, which is frankly the cost of building a Hollywood movie, then you're talking about $500K or even as low as $50K to build a game.
So cheaper because they got so expensive. So when you look at, but the distribution is so different. You look at GameStop, and I spent the day at San Francisco Airport yesterday, and I thought about airlines where United and American had these huge expenses, unable to compete with maybe the Alaskas or certainly the Southwest, maybe Virgin America, we don't know.
Right.
Is GameStop's just a place where you buy physical stuff? Is it anything more than that? What do they do to fix that problem?
So I think GameStop is thinking very much forward, and they have the right mix of paranoia and forward thinking, so they are not going to get blockbustered, in my opinion, because they're already thinking about things like social platforms, online downloads, in-game purchases, even for Xbox-type console games, Xbox Live, and that's why they've made acquisitions like Congregate, Spawn Labs, and other digital distribution technologies, so they can be ahead of the curve and be ready to be a digital retailer and not just a brick and mortar.
That said, Tim, an analyst at Forrester Research today came out with a report saying that Facebook will not be a force in e-commerce. So is this Facebook store enough to keep GameStop going down that path of only having physical games and not being involved enough in the digital marketplace?
Well, one thing I think that GameStop is thinking about, it's not just Facebook, but it's the web in general, because the whole gaming industry is shifting towards online distribution. That means browser-based games, as well as smartphone, tablet-based games, and of course Facebook, which is the 900-pound gorilla in the U.S. But we're going to see more games going to the open web and off of Facebook. So in some ways, I like to say Facebook is in the retail shelf. You might get your players there, but they might actually spend more of their time playing off of Facebook.
What about streaming game services like GameFly and OnLive? Can GameStop out-innovate them?
Well, I think what you're seeing is that GameStop will partner with companies like these technology providers, Gaikai and Spawn Labs and others, basically provide streaming technologies so that they can deliver sort of Netflix-style game experiences through your browser. Other companies like OnLive will try to compete directly with the retailers. So you see a mix of business models, but I'm a big fan of this sort of Netflix of gaming, or cloud gaming as I call it. It means that guys like Xbox may not have to invest billions in trying to create Xbox 720. Because these are extremely expensive, extremely risky propositions to try to launch a next-generation console.
Xbox 720, I love that idea. But I looked at some of the numbers from the big console games, Activision's games, Electronic Arts games. Those numbers are huge still, and a lot bigger than we're excited about the new and the fresh, but the console gaming business is still kind of fantastic. How does GameStop move into a new world and yet stay important in the old world?
The hardcore game segment will still be dominated by console games, and a lot of times these are going to be your $50, $60 purchases like your Call of Duties and your Medal of Honors, and they are what we call sort of the tentpole.
Games that have done a huge $600–700 million in revenues in their first couple months, right?
These are billion-dollar franchises. Those will exist, but the analogy is like the movie studios, where Warner continues to double down on Batman 1, 2, 3, 4, 5, right? So you'll probably have 4 or 5 of these tentpole releases a year, but
tentpole releases,
right? Sort of the major releases, which often cost hundreds of millions to develop and market, but that leaves the whole rest of the market with casual and sort of what we call mid-tail games, if you will, right? They are migrating more towards the online and casual sort of social market, if that makes sense.
Now, why have the development costs come down so much? That's been a confusion, because when I used to cover games 10 years ago or more, the prices, the cost of those games were just skyrocketing, well past major motion pictures.
Yep.
Why have they suddenly come down for these online games?
See, and for online games, because platforms like Facebook, the games are appealing towards a mass market audience, you don't need the latest 3D graphics. You don't need thousands of polygons. You don't need all the cutscenes that normally cost you millions to hire artists.
Thousands of polygons mean something that looks very three-dimensional.
Photorealistic, right?
Right.
In fact, some of the early social games like Mafia Wars and Poker, they hardly had any graphics at all. They really just had little pictures and text and buttons. But the point was the game mechanics and the social mechanics were so addictive that you didn't need any graphics.
Fun to play.
They were fun, right. And you didn't even need graphics to achieve that fun. So imagine making a hugely profitable game that's making in $3 million, $4 million a month that cost you $50,000 to make.
Let's return our conversation to gaming and the gaming landscape. Tim, I'm glad you're still here. GameStop, mobile, GameStop tablet, are we going to see one?
I don't know that you'd see GameStop launching its own tablet, but an application that's the equivalent of a digital version of a storefront on a tablet, that's a no-brainer.
Why would there need to be something between an existing OS, let's say a Mac OS, and a game itself? Why would any game developer want to give GameStop rent for their real estate when they don't need to anymore?
Great question. This is the battle that's happening. Who is the storefront? Everybody thinks they can be their own storefront. The developers and publishers are now feeling like, hey, I can be my own storefront. Why do I need to pay rents to a GameStop or an Apple? But the truth is, if you have loyalty of your audience, that makes you valuable as a storefront. So it could be things like loyalty currencies that keep customers coming back.
So loyalty currencies with existing games, I mean, you got to start somewhere.
It's true, but think about it this way. If you already have an existing loyalty system and you could extend it to digital and then have those credits be applied for digital purchases as well, that might keep your audience coming back and following you to other screens outside the brick and mortar store too.
Tim, if the trends are going towards mobile and social, why are the EAs, Electronic Arts of the world, why are they spending so much on the Call of Duties and the big game franchises?
Well, those are proven moneymakers. Those are your tentpole franchises, just like watching movie studios like Warner double down on your Batman Dark Knights and your Harry Potters and extending those because they're your cash cows. And these are, remember, billion-dollar franchises. But in the meantime, you're even seeing the EAs of the world make hedged bets into other areas, as seen in their acquisition of Playfish, right, for quite a substantial chunk of money, as well as Disney purchasing our former portfolio company, Playdom.
So within the gaming sector, where are you putting your money? What are you most excited about?
That's a good question. I had a little bit of luck last year in social gaming. We had two good outcomes there on sort of what I call social gaming 1.0 with Playdom and then mobile social gaming with NG Moco. But those wars are getting very, very furious these days, and the space is consolidating quickly. So I've been a proponent of what I call gamification. So that basically means taking game mechanics that we learned in these Facebook social games and applying them to other industries outside of gaming, such as shopping and commerce, fitness and wellness, health and nutrition. So basically it's the gamification of life, and there's a lot there because that market is huge.
How do you start to pencil out the possibilities here? Because it does seem like we have a whole new world of people playing games. I was flying to the CES show in January, and I sat down. There were dads sitting on each side of me, both of them playing Angry Birds, right, as was I. Yeah. Not traditional game players.
That's right. And it's because the gaming market is broadening. Used to be gamers, hardcore gamers, that had this stereotype. These are the fanboy types who are...
Right, but the question is, how do you figure out how to invest when the landscape is different? Is it bigger? Yes. How big? We don't know. So how do you decide how much money to put behind an idea?
Here was our thinking on social games the first time around. Let's assume half the world will be on a social network, probably Facebook. Half of all social network users will play a game. Assume half of those are monetizable. That's an eighth of the entire online world. That's a huge market. But you're not selling them Call of Duty. You are selling them things like Angry Birds or Farmville or much more simpler casual games that appeal to mass audiences.
Does that mean, though, you can lower your bets because the development cost is less? Because if you're betting on your market is an eighth of the world, you could overspend really quickly if your games don't hit that market.
That's right. And the beauty, though, these platforms are so simple and primitive, you can make $50,000, $500,000 bets as opposed to $50 million bets.
How early in the investment cycle can you... Because the thing about games is a Tetris, which is the crummiest, or Pong, the crummiest graphics of all time, can be the greatest games of all time because the gameplay is so good. So how do you know, at what point in the development of a company do you know the gameplay is going to be great?
You know the gameplay is really good when you see a huge rate of new users coming in. So, the installs.
But you invest before that. Your money's there a long time before there are users.
Well, you know what's interesting? Because the costs are so low, a lot of times, these folks have bootstrapped their companies and already launched a game before they even raised venture venture capital money. So you almost get to see sort of the quote-unquote the dogs eating the dog food in real time. That said, when we're going in really early, the only thing you can look at is the quality of the team. If they're known rock stars from the gaming world that have made hit after hit, that's how you evaluate the people you bet on.
So, Tim, if the gaming landscape is changing so quickly, what kind of game providers, or specifically what companies do you think are going to get left behind?
The ones that get left behind really quickly are traditional console developers that don't have their own blockbuster IP because then they're dependent on fundraising to get money to build another console title in a shrinking world of the console developers. If you're not one of those tentpole franchises, then it's going to be harder and harder for you to get a game greenlit. That's why traditional game developers are actually flocking to the new platforms. Everyone's now a Facebook developer. Everyone is an iPhone and Android smartphone game developer.
All right, Tim Chang, really glad you could join us, making the cash register ring as well, making the games playable. We appreciate it.
Thank you.